Hi, good morning or good day, wherever you are. Welcome to our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Friday, 30th of November, 2018. Welcome to Admiral Markets. And you will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version of the disclaimer there. If you are in the European Union and you'd like to read more about the topic of the year for all CFD traders, the ESMA regulation and the different offers and options for retail clients and professional clients, also that you can find on our web pages, or a picture shows more than 1,000 words. 2 more than examples, DAX 30 and also Euro-Dollar. The margin requirements could be quite different if you are a retail client or a professional client. If you are a professional trader and you like to get the professional client status, if you are eligible, you can go to our web page and apply for it online. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get it via regulation, but some brokers and of course also Admiral Markets have an additional protection. We call it negative balance protection policy, and here you get a protection up to 50,000 British pounds, what is round about 70,000 euro. All details about that, check it out on admiralmarkets.com. This is me. My name is Jens. My English made in Germany. We are a big international Forex and CFD broker. So I'm the German guy, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. On Friday, like today, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30, triple spread of just 0.8 points. And new since that week, Euro-Dollar, 0.6 pips typical spread during main trading hours without additional commission. Check all that out on admiralmarkets.com. And One World, global offers. If you'd like to check out what we are doing in Chile with our office, or in the European Union, or in Australia, it's your choice. Go to our webpage and you'll find more about our offers globally there. Enough from my side. Time for Dirk. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Hopefully you can hear me. I just got the note that possibly the Wi-Fi is not too stable. Hopefully I can transmit everything and should be clear. First of all, before we start, I'd like to just open that so-called chat window here and just type guys some stuff in there, just that you got some information about that as well. Let's see if that works out. And that's one link from the Federal Reserve. Let's see if it works. Yes, should be fine. And that's another information for you guys from the Federal Reserve as well. And all those 2 links are just giving you some maybe a 100% direct source of what was going on with the Federal Reserve and the FOMC statement. The second link is the link from the Fed projections. That one is still valid because it's from September. We had no Federal Reserve meeting, no FOMC meeting in October, and so these are the old projections of the federal funds rates and the Fed projections about the interest rates as well, of course. And the thing is, what is going to happen in the next weeks to come is the market is about to let's say adapt to the new talk of Jerome Powell, because Powell simply started something like a process of unwinding his own words from the last session, from the last Federal Reserve session. So what is it going to do with a couple of trade possibilities around like gold or like the Euro-US dollar rate? First of all, we've got the last day of the week, of course, like every day we do that here with me. It's Friday, of course, but it's the last trading day of the month. So that possibly is going to shake out a couple of shorts and longs. And sometimes movements like these are not too clear until the US market's about to open or in the middle season of the US markets. So we started a couple of positions here, positioning in Euro-US dollar first to try to be long when looking for these targets around 114.45 and 115. And we got a open of US dollar Canadian, so Loonie, which is a short trade here. This one is going to be with a first strike with a stop loss of 133.68, so a little bit of above the last high from the last days. And this one is looking down in direction from the 130s, just because next week we're going to have a rate decision at the Bank of Canada. That's the only thing what is behind that kind of a trade setup. So that's the first try of a short. Possibly the Bank of Canada is hiking. You never know what's happening at that day around these Bank of Canada hikes, but just for a little bit of a background for this kind of trade. And last but not least, we got gold, a gold setup with a long setup here, which is widely stopped with a $30 stop loss room. It's a lot of room there. But it's probably in direction, hitting back in direction to the 1270s and 1280s and even above, just because it's the end of the year and it's going to be a trade for a longer term setup. It's not a day trade. All right, just let us close that stuff here and just have a look at the German DAX first. We're gonna close that one here as well. Just hide all and going to close this one here to give you guys more room. So what is going on with a longer term view, and what is going to happen with a couple of lines here? Just switch to another chart. I just prepared that black line here. It's 11,175. What does it mean? Well, I'll go back to 4-hour chart, squeeze the window a little bit more, and insert your Fibonacci tools. Going from the last low, from the year's low, it's 11.09, and going up to this last high. And you will be seeing that that black line here, that 11,175, is directly the 61.8 level on the 4-hour basis here. So that probably is a nice area where to speculate on a bounce back. All has to do with what is coming up with stories from Buenos Aires, where the G20 summit is taking place. Because you never know what is on the menu between Trump and Xi, and that means a lot for German companies and automakers and a lot of these exporters, which are all together in the German DAX. So that means a lot what is going to happen, not only on Friday, but the days and weeks to come. Okay, before we get into more technical stuff, we spoke about this G20 summit, and you guys are aware of the U.S.-China trade tensions, and you can imagine it's not going to be solved in one day and one dinner and at one G20 meeting, but for sure they have the chance to ease it. And they have the chance to maybe to slow down that tariff stuff and to possibly take away that new tariff sessions from January 1st, which they already spoke about, hiring those tariffs to 25%, a couple of them, or doing tariffs on every kind of Chinese goods coming to the United States, and so on. So that could ease a bit. Possibly there's some room for markets to relieve, not only for the DAX, but especially for U.S. markets and Chinese markets. And if those two markets, those two rooms, are going to back up, to rebound to the upside, the German DAX will be sucked up the road as well. So that is an important message, because if you look, and that was the first thing I gave you. If you look at this FOMC statement, and if you look at the language of Jerome Powell, you have the feeling that it's already a little bit of Christmas, because he spoke about it. One analyst, I wrote a lot of research the last days. One analyst wrote something about ho ho ho, Santa Claus is here, and it's funny because if you look at the interest rates, and if you look at the next weeks and months to come, it possibly means that the Federal Reserve is not going to hike that much in 2019, like they said before. So that could mean that a couple of goods could be interesting. Like I said, gold. Like I said, Euro-US dollar to the upside. Like I said, a couple of markets to the upside, and even a rebound for oil. And if you look, for example, to the Brent, or if you even look at the WTI contracts, you see almost the same stuff going on. If you look at the oil price, you see that move from the year's high to that current lows here. It's more than 30%. What does it mean? What kind of implications does it have? Well, lower inflation. Because if you look at the price of oil, at the price of gasoline, the price of diesel, not only in Europe or in Asia, look at it in the United States, one of the most important markets. It came down a lot. So that means that consumers have more money in the pockets, and they possibly could spend more, not even on Christmas presents, but in the next weeks and months to come, they could spend more because they save more. Just something maybe you don't have on your screens. If you just think about the price of 1 gallon of fuel in the US, it dropped under $2 a gallon. So that means $2 a gallon. What does that mean in a liter? That's probably something like 55 cents a liter in US. And if you just divide that and get that done in euros, that's not even 50 cents a liter. So 48, 47 a liter. Imagine you could fill up your car with a price like that. Well, that means hooray for the rest of the market, and that means a lot of possibilities for a rebound scenario. So you got to think about it a little bit more optimistic, not only pessimistic. Things to come, I colored that on the blue box right here, is a possibly rebound scenario for the Brent price. You can see that stuff as well at the WTI charts. And this one here, the Brent chart, reached and scratched and underneath the 161.8 level. And it's now scratching and trying to get back up. Of course, look at contracts, what time they are going to be expiring. Look if the new contracts are cheaper or if they are more expensive. So if the rollover is giving you some interest or not. But in fact, it could mean that the implications for these solutions around the G20 summit could lead to a little bit more of a rebound in a couple of markets. Okay, going back to the DAX. On the 4-hour basis, we already checked out this level. On the daily basis, we are going to check out the same stuff as well, and doing that here with the last high and the last low. And of course, combinations of those two are better with two different colors. Just not to get confused with some colors, and that you just need to have the same levels. And if you have some clusters, looking back at the 4-hour chart, so that you see some clusters here. So 11,175 is quite interesting. On top of that, you got some nice other signals. If you check out those levels, these XZ levels, supports. So support 2 is 11,198, coming a little bit more to this downside. In combination, 11,198 and 11,175 maybe is a nice entry zone in direction of 11,180s or 11,190. We'll insert that one with a shape. So something like a so-called trading box where it possibly is a nice entry zone for a rebound scenario. Of course, you never know what is going to happen in the next minutes or hours to come. You never know what is coming via the G20 summit. If they are absolutely divide themselves, if they are absolutely out with some new messages, which is really kicking the market to the downside. All this kind of chart technical stuff is just washed away. Of course, you guys know that. The political markets are not easy to trade. To the downside, that means that we got a possible move to the the year's low. That's another scenario where you can pick up or try to bet on a rebound. For the bears, of course, just doing the same to the downside here as well. If you just move that projections, and you see that projections are in direction of the 138 168.2 level and the 161.8 level. You got some projections giving you a hint around 10.800 and 10.700, but there is a next possible rebound scenario there. Just for let's say for those guys are having more patience. Patience is another word. If you speak about day trading or scalping, or if you speak about swing trading, whatever kind of a trade strategy or a way of trading you are about to do, about to fulfill, trading could be something like stalking or waiting and having patience, because it's something like being a snake or a lion, something like a snake in the bush or a lion in the grass. You're simply waiting. You're simply waiting for the next victim, or you're simply waiting, let's say, for the next perfect trade scenario. Let just the market be market and move the market into your direction and not the other way around. And just try to do some research and try to get some new setups done, which will work better for you. Just in case of you don't want to jump on a trade just by some curious gurus told you, oh, you might jump on this one, you might jump on the next one. Just do your own research, do your own due diligence stuff, and try to adapt to the market movements. Okay, first of all, that's the couple of trades I already told you. And next one was, let's just have a view on the market watch here. And Bund is not interesting because of the rollover. Brent, gold, euro, US dollar, where was it? Euro NOK, it's not tradable right now, but it's interesting in case of you guys do it with MT5, I guess. I'm not sure, Jens. Is Euro NOK tradable via MT5?
It is.
Okay. That's the only thing. Okay, if it is tradable, just one thing, because it's interesting getting in touch with the 61.8 level right now, and it's a possible next scenario to get short here at that kind of a level. Just to speak about that quite quick here. So just to show you that one. Okay, next one was where was it? The Loonie. Okay. The Loonie trade is something, let's say, getting more interesting in the next days. I spoke about that, and I told you guys that the first setup here already got set. You see the sell order here already. It's just a small trade. The daily, looking at the daily, or looking even at the weekly chart, looking at Fibonacci's first, you might see that this from the upside to this last low here, that is getting interesting in direction to the 50% level, and already scratched that here. Doing that with a daily one, so a daily analysis, doing that from the last high here and the last low, and just trying to get that done with a couple of with another color. Just hold on a second, just using red right now, and just to try to squeeze that chart more. You can see more. 1 second. Let's just delete that one here. Oh, I just want to click that one. Damn. Yep. All right. Okay. So that you might see some Fibonacci retracements going to be scratched soon. And if you just check out the upside here as well, which is a huge, of course, a huge way to the upside, could be 136. But in case I am a little bit of right, and there is a small rebound back to the $70 level at Brent, and back to the possibly 60, 61, 62 level at WTI oil prices, that could lead to a little more relief of the Canadian dollar, because the Canadian dollar is a little bit of moving, let's say, with the price of oil. And if it's getting more stable, the price of oil, the loonie, so the Canadian dollar, is going to be strengthening. On top of that, it could be, like I said before, could be interesting because of the Canadian rate decision next week. Okay, so far so good. Are there some special questions? I have one single stock to have a look on, Jens. Maybe you have some questions from you guys. Just open a market watch and show you guys what I'm talking about, the single stock. And maybe
I'm not sure. Did we had gold? If not, gold is still market.
Oh yes, of course. I spoke about gold. Of course. I'll do that one first. I just opened Daimler. Let's go. Let's get back to gold, of course. So, of course, gold. Yes, I opened that one, and I did that just because of some kind of technical reason and seasonal reasons. Let's just check some retracements going to the upside and downside here, and of course to the longer term scenarios from the low of 1160 to that last high here. I'm just changing colors here as well. And 1 second, and you gotta be checking out those new levels spoke about. So I'm just doing that a little bit more, bigger. And this kind of a trade scenario started around this moving average here. You got to see that moving average 100, which is ticking and trading around 1224, and you got that 50% retracement to the downside, which is around the level of 1219. So there is some room. There's some room until 1196, 11. What is it? Just use the horizontal line to mark that level of that stop loss, which is around 1193. A little bit more room could be given if you guys have the account to do so, or if your risk money management is giving you allowance to do so. You could possibly do it sub 61.8 level here, going in direction to 1189. But you gotta obey rules and gotta think about so-called COEs. So chance risk is going to be in the right setup. If it's going to be too much room to the downside and the trade only has a possibility to gain some 20 or 30 bucks to the upside, that's maybe not too correct. So it depends what you guys are up to, and of course it depends how long you want to hold on that one. This one is a gold trade setup is for the next weeks to come, and if it is necessary, even if you look around year's end. So the target of this trade from a scenario is 1280, 1285. And if you check out those levels from Fibonacci projections to the upside, you got to see where it is running to. So 161.8 is above 1272, and that's an overshoot in direction to that level and scratching 1280 possibly. Why do I think about that? Just because I think about some kind of a change in the euro-US dollar currency and about let's say a weakening US dollar in the weeks and months to come. And even if you look at the euro-US dollar rate, it looks like we already saw the lows at 112.15, and that could lead to more upside for the euro-US dollar rate in direction of 115 and 115.99, so 116, and getting back in the next month to come. So that would lead to a little bit more expensive precious metals like gold or silver. That's the only explanation I can give you so far. On top of that, you may have a look at this commitment of traders reports and see that so many guys are net short the precious metals on historic base still, and that could lead to a little bit of a shift. So that all those guys are rebalancing positions until year's end.
time is always our limit, so I would like
Jens,
to thank you.
Stop me.
So I guess we are ready. Tomorrow is another day. Tomorrow is weekend, so already now have a nice weekend. And the next live webinar is on Monday, real-time daily trading, same time, same place, just a different day trader. And don't forget, since that week, we have better Forex spreads for the Forex majors. For example, Euro-Dollar. Triple spread just 0.6 pips only. British pound, US dollar. Triple spread 1.0 only. So check it out without additional commission, no minimum stop distance, no dealing desk. So if you like to trade better spreads since that week for anybody in MT4 and MT5. And if you don't know, we have MetaTrader Supreme, and there is one of the 60 additional features you have, spread indicator. So you can see really what is the spread. You can check it with us, or even with other MetaTrader brokers. Just download it, and you see for every minute the spread, the maximum spread, the average spread, and the minimum spread. And like you see, our 0.6 is really the average spread. Sometimes if there's something going on, it goes up to 1 pip, but that's nothing if you compare to other brokers. So do the math, check it out. I believe the best offer for Euro-Dollar and also British pound and US dollar, and all the time for DAX and Dow, of course, you will find it at Admiral Markets. Check it out. You have all the instruments, MetaTrader Supreme, you can do with us or other brokers. I believe we will win. Great weekend to all of us, and yeah, all the time best trades. Thanks to Dirk. Bye-bye.
Bye-bye.